Welcome to Life Esteem, a program committed to delivering information that's important to you and your community.
You use either one.
Hello and welcome again to Life Esteem. Always great to have you as a viewer. Hey, today we are so blessed to have with us Brian Hudson, who is the Executive Director and CEO of the Pennsylvania Housing Finance Agency, homegrown, by the way, here in Harrisburg. We're so proud of this brother.
Yeah.
And he's just been doing a fantastic job. Brian, welcome to the show.
Thank you. Thank you both.
Yes,
Thank
indeed. We know you're a busy man. I'm so glad to get you on here.
I'm glad to be here.
Yes, indeed. You know, a lot of people don't know about the Pennsylvania Housing Finance Agency, but you guys do tremendous work, and you have a tremendous reach. Tell us all about the agency and, you know, the kind of services you provide.
So PHFA, as we are called, is the Commonwealth's leading provider of affordable housing. We provide mortgages for first-time home buyers throughout the Commonwealth, and we also provide rental housing. Those looking for their first apartment or moving from the apartment to buy their first home. And then we have a program that came to attention on a national basis, which prevents foreclosure. If you are going into foreclosure for no fault of your own, typically that's a medical reason. You lost your job or you lost wages, underemployed as we like to call it. That will help you stay in your home and pay your mortgage for up to 2 years in this environment until you get retrained and bring more money in. So that got national attention. But our two flagship programs are our multifamily rental program and our first-time home buyer program. We'll do anywhere from $500 million to $500 billion of loans, about 5,000 loans a year. And we service all those loans right here in Harrisburg on our 6th floor in our headquarters, by the way, too.
I'll take that back. A lot of people do know about you. I bet you they run into you. That kind of money, oh my goodness. And there are a lot of people back in 2007, 2008, foreclosure was... Wow.
Foreclosure was happening big time. And, you know, Pennsylvania unfortunately had experience with foreclosure when the steel mills were in trouble and closing up. So in the western part of the state, in 1983, as a matter of fact, Kaylee Rivers sponsored a bill that will help steel workers stay in their home and asked us to run the program. And we've been doing that ever since. So when we came to the crisis, we were a little better prepared. But we had some issues in 2003 up in Monroe County where people were being foreclosed on and they didn't understand the documents they were reading. And I spent months up there talking to, I mean, very well-educated individuals. Did you understand, you know, that you have to escrow for taxes and insurance and you have to make repairs? And then I said, well, we need a counseling network. And it was in '03 that we started our statewide counseling network to educate people about the responsibility of home ownership. So when the crisis hit, we were a little better prepared. But it was a nationwide problem. I was called to testify before the Congress House Financial Services Committee and told them about HEMAP. You know, it's an unemployment program because there was a high unemployment across the country and why it works. And as a result of that, Congress actually appropriated about $8 billion across the country to help what they call the hardest hit states, those states who had high unemployment and high underwater value mortgages. And my counterparts in their states were running those programs, so they were calling about HEMAP. Delaware started DMAP and North Carolina started an unemployment program, and we were on conference calls. I said, we didn't get any money for that, but you all can pay me $10 million for consultation. But it was very timely and it helped a lot of individuals, not only in Pennsylvania but across the country. And during that testimony, there was a congressman who said, "So, sir, you're telling me that this is a loan program and not a grant program because they didn't want to see any more entitlement programs." I said, "That's correct, Congressman." And he said, "Oh, no further questions." That congressman was Jeb Henderling from Texas, who is now a key member in Congress today. But it was Barney Frank who actually pushed me to come down and talk to the members of Congress about our program.
Fantastic. Well, that's amazing. So you're like best practice and model as the people to see how this can be done and all can happen. Now, how long have you been with Pennsylvania House Finance Agency?
I tell folks I was born there. I started in 1975 as a staff
accountant. You were born there.
And it's been 42 years this past February, but started as a staff accountant and worked my way up through the ranks. We are what we call a quasi-governmental independent agency, so we don't survive off of taxpayer appropriations. Our funds are self-sustaining. We basically raise our funds by selling tax-exempt and taxable securities in the capital markets, and then making those mortgages to home buyers and then servicing those. So that's how the agency has grown. When I started, we had about 15 employees. We now have 325. We have an office in Pittsburgh and an office in Norristown, but headquartered here in Harrisburg. So the loans that we service, a little over 60,000, about $4.5 billion in here in Harrisburg. So when they call, it's not Texas, it's not service that's been transferred some other place. They're getting, the original right here, and we try to help them if it's an indication that they're getting into trouble immediately. We'll send them to what we call the free counseling network, and it's free, basically.
Fantastic. There's people will say, oh, I own a home. But I heard you also say, you talk to some very well-educated people. They didn't really know everything. So, and one lady just said to me, she said, when people are in an apartment, they're just taking money and just throwing it down the drain. I said, not necessarily, but So we don't always know, but the dream, of course, is to own a home. What do you think most homeowners, I'm just talking about the homeowners at this point, just don't know, and the reason why they get in trouble with, maybe back taxes or the escrow, you mentioned stuff like that. What do they need to know, even though they may be homeowners?
Well, one thing is budgeting. So we like them to be prepared. What are the responsibilities of home ownership? And years ago there was a homeowner who called and said, my roof is leaking and I need someone to come out and fix it. Called you? Yeah, called us. I said, well, we got a problem. But I think, first is budgeting. There are going to be unexpected expenses like that. Your taxes, if the municipality raises your taxes, your mortgage payment will go up. Most people don't understand that. And that's a direct. And if the insurance rates go up and your homeowner insurance go up, your mortgage payment is going to go up. People think that when they lock into that home, that payment, that's going to be for life. Well, those are the two driving things that will drive up your mortgage payment. And in some cases, there have been some municipalities where the taxes were increased pretty dramatic. If you are in a tax abatement area, you don't pay any taxes for the first 10 years of you bought a home, that 11th year when those taxes kick in, that could really substantially increase your mortgage payment. So that's where the education process really comes in. And as I tell everyone, we're in the rental business and the home ownership business. And some folks are just not ready for home ownership yet, but our job is to get them ready. So that once they get in that home, they can stay in that home.
So, and I do remember you did a number of educational sessions for first-time buyers to get them aware and understanding that commitment and what's going to be necessary for them. And how have they been received? Have you been getting a lot of folks to really participate and come out and be part of those?
Absolutely. I mean, because home ownership is still the American dream, and people want something that they can call their own. So it's just that some of them think they're ready for it, and they're not quite ready yet. So well, your credit score, and that's just one measurement of readiness, we call it. But we look at everything. We'll peel back the onion and it says, why is that credit score in bad shape? And it might be just one medical bill out there. And if that gets corrected, the credit score is back to some reasonable levels. You'd be surprised how many people don't check their credit score, don't know their credit score. And I say you should check at least twice a year, at least once a year if you're not doing it, but preferably twice a year.
Because if you don't, someone will. Someone will. Looking for that. That's right. that car or whatever you're trying to get,
That's right.
So you're a child of this, 60s and 70s, and you know all about the civil rights movement, that kind of thing. So a lot of things have changed over the years for the better. On the other hand, though, there's still some, little, I guess, pitfalls out there. Back in the day, we used to talk about redlining and all kinds of stuff that affected, So what are the things that we should be sort of looking out for today when it comes down to buying that home and, not being discriminated against or getting into an area where there may be some issues like flooding might be an issue, but they don't say, oh, you don't need flood insurance or stuff like that. What should we be looking out for?
Well, you saw in Texas where they told people you don't need flood insurance. I said, okay, well, it might be a 100-year flood, but that's just what you got hit with. So, and sometimes when you're going to buy a home, people get intimidated. So they don't want to ask questions. Don't ever feel that way. I said, if you're not sure and you don't understand, go to someone who does understand. Go to an expert, go to that free counseling agency, and have them take a look at, what they're proposing to you. Do not sign on the dotted line until you're actually comfortable. And that's the best advice I can give anyone. If you don't understand what you're reading, go to someone who does and get some advice. And shop around. Shop around. Just because that bank says, we'll give you a loan at 5-6%, and then you read the fine print and the rate changes every 2 or 3 years. Don't do that. So the best advice I can give someone is to shop around. You mentioned redlining.
Yeah.
And that's one of the reasons why we had actually started our own mortgage insurance entity when there was redlining going on, because loans weren't being done in areas where we thought they should be.
Right.
So we started a subsidiary insurance fund to do just that. And then the insurance companies came back in. But that's part of our mission. We'll go into areas where people don't want to, but we can show them if you do it right and you're serving the people who need it the most.
Yeah.
Well, let's talk about the question Nate asked initially in regard to home ownership versus apartment leasing. And even though some people may not be ready to own a home, but there are individuals that maybe apartment leasing is the best way and manner for them.
That's right. That's right. Millennials love that for one. All right. And as they age and figure out where am I going to work, and if you're going to be in somewhere in a temporary basis, renting is good, and that's the way you should go. Until you figure out career-wise, I like this area, I'm going to stay here, and then you start to measure. My rent is $1,000 a month. I can get into a mortgage for $800 a month. I like the area. I'm going to stay. Let me look around and buy a townhouse or buy a single-family home. So everyone's case is different,
That's right.
and that needs to be evaluated. What's the best option? How long do you plan to be there? If that's going to be your permanent residence, you think for the next 10 to 15 years, home ownership might be the way to go for you. If you think I'm going to be leaving in 3 to 5 years, then leasing is good. If you're not ready financially to be a homeowner with the responsibilities that come with it, you got repairs and maintenance, you don't want to deal with that. So some folks just don't want to be shoveling snow and making leaves, so then that might be an option for you. Yeah, absolutely.
And that takes me to the point, because there's this group called the senior citizens. I heard about them. But anyhow, I heard about them. But now they're beginning to move more into, say, apartments and stuff like that.
That's right.
So they sort of they call it downsizing.
The downsizing.
Yeah. So do you think that's really the best option, though? When you're a senior citizen now, you got that property, and like you said, you don't have to cut the grass anymore, shovel the snow. But is that really the best option for it?
And I see a lot of them doing that. My in-laws did that. And I said, okay, I understand why you're doing it. And for them, it's the time and the maintenance issue.
Absolutely.
If the cash flow is similar, then they take away the obligation of having to cut the grass and shovel snow. Then that makes sense. If you're looking at a big difference in the cash flow, then you might want to rethink that. So that's really, and that's why it's on a case-by-case basis. But I do understand why some seniors move into a smaller townhouse, where you have a company that comes in and shovels the snow, takes care of the grass. You don't have to worry about that. Your rent and the mortgage payment is the same. They've actually sold their home and taken that gain out of their home. So, and their monthly income, aside from the gain, if they're invested that and put it someplace else, I'm getting into the weeds a little bit. That's how I would advise folks: don't spend that money on the rent. You shouldn't be using that money to provide your rent. If your monthly cash flow, excluding that, is the same, then that makes sense to do that. But you shouldn't be using that gain from the sale of your house to do that, because then becomes, then you're dipping into your savings that are your...
Absolutely, So you mentioned the word intimidation. And that's true. I mean, and I know you have classes.
Right.
So a person is just starting out. I'm thinking of some young people who, they're just really not ready for life. Let's be honest about it. They've gotten together. They didn't really pay attention to that school thing too much, and they're kind of out here on these, menial jobs, right? And they're just trying to make it. And now they really want something. But they look at their income and they look at where they are and they're like, wow. So when they go to these classes, how do those classes help prepare them, or at least help them to understand? Because the stuff seems so complex.
Yeah, it does.
Right?
And it goes right down to the basics. It'll start with budgeting. What can you afford? Get into what's your monthly income. Do you know your credit score? And it's really eye-opening for some of these individuals. And I can't tell you how many people I've talked to over the years that that was the best route for them to go, and they didn't understand what the responsibilities of home ownership. And in those classes, it's an open environment. The counselors who we pay out of our budget is free to them. So they can ask them any question, and we keep training those counselors on a regular basis, so they're up to speed with the trends of what's happening in the mortgage industry. So they are basically delivering the right information to those individuals. But that's the best route to go, even if you think you know everything. Which there's a lot of people who come and think, oh no, I know I want a variable rate. No, you don't want a variable rate mortgage. No, because they think they know. But once they get in there and they see, oh, okay, so oh, I can afford a $250,000 or $300,000 house. No, you can't.
No. Yes.
Based on the credit cards that you have outstanding, your ratios or your back end, your front end ratios are this and this, and that doesn't qualify you for that loan. Oh, really? Yeah. So get rid of some of these credit cards. So some of those people would be in that network for a year, maybe 2 years, before they clean up their credit, and then they're in a better position once they get that house to stay in that home. So it's an eye opener for a lot of folks. It really is.
There were some great movies that came out recently. We're movie buffs, so we go to all these movies, right? But two of them dealt with the housing crisis.
Right.
And I forget the names of them, but they were great movies.
Big Short.
Big Short. That was excellent. So when you see those things, I mean, were they ringing true for you?
Oh, we were living it.
We
were living it. Because the way we fund, and this is getting a little more into the weeds again. So our debt, we had variable rate debt. We had what's called a derivative with Lehman Brothers at the time. So every day I was waking up, I had to get rid of a partner. So our single family program is AA plus by S&P, which is a top rating. But it wasn't that we were in trouble. It was the partners who were saying, okay, PHFA, we'll buy these bonds if the market crashes. Well, guess what? The market crashed. And I had investment bankers who tell me, well, our auction rate market has been around for 30 years. It hasn't gone bad. Well, guess what? It went bad.
It went bad.
And we had agreements with German banks, French banks. So every morning I'm waking up, I had to get rid of Dexia, which was a French bank who was backing some of our bonds, 167 million. I said, all right, we got to remarket these bonds and get rid of Dexia. There was a German bank we had to get rid of. So we were living that every day. A Lehman swap, small amount. It was about $300,000. It took 2 or 3 years. We finally got most of 95% of our money back from that. But it was very, very stressful. But at the same time, for us, the silver lining was it allowed us to broaden our range of products, increase the counseling. We lobbied Washington that said you need to have required counseling on a national basis, not spotty. And HUD started a Department of Counseling as a result of that. But it was it was happening right then and there, and we were actually living it.
Oh my goodness!
What we saw in that movie was real.
That's right. It was real. It was real.
Because the one movie I forget, like again.
There's another one too. Big Short is another.
But the one kind of left us with the thought that here was 2015 or 16 now. And they said, unfortunately, we're kind of cycling back into that, but very quietly. People aren't paying attention.
Right.
So what do we need to be paying attention to from where you sat? I mean, because you're seeing it, the big picture. I mean, you know, we're down here worrying about trying to buy a house.
Right.
So are the rules and regulations, laws out there, are the trends out there that we need, as a general public, we need to pay attention to?
Yeah, one of the signs is the wrong product for individuals. So people were buying what we call piggyback mortgages. You know, they're getting 2 mortgages to get into a home, and their income wouldn't support those mortgages. Variable rate mortgages. For instance, in our portfolio, we don't do any variable rate debt. If we did, we would be underwriting those individuals to the highest rate that it could go to. That was a problem, because people were getting into variable rate mortgages, because initially, the first 3 or 4 years, it's a low payment. And then after 5 or 6 years, that payment goes up. They couldn't afford the house, foreclosed.
That's right.
And that's what was happening. That's the wrong product for that type of, that's a sophisticated product for a person that's not going to be there for longer than 5 years.
There was a time when they called predatory lending.
Predatory lending. Yep.
So which groups are more vulnerable at this point? I mean, when I talk about groups, I'm just talking about groups of people, demographics, that kind of thing.
Well, that was a product that was primarily to minorities, you know, African Americans, Hispanics. They were the biggest, victims. I call it a predatory lending, and that's one of the reasons why we started our counseling network. What happened in Monroe County was, in fact, predatory lending. There was collusion between the builder. Alleged collusion between the builder and the appraiser. Appraising the properties high, the builder's double charging for lots. The fees were double charged, and I looked at them. I said, "This is unbelievable." So, but in that community was primarily African American. People that, and we looked at commercials. They were showing commercials in the Queens and the Bronx, New York. Come buy your dream home in the Poconos. Are you tired of the gunfire and the violence in the Queens and the Bronx? So these people moved from the Queens and the Bronx to the Poconos, thought they're buying a dream home in a nice suburban setting, and weren't disclosed, told all the facts about what they were buying. And the foreclosure rates went through the roof. So we had to try to help some of these people, and there was lawsuits that went on for years out there, basically.
My goodness.
Now, is your agency involved in any way with the developers that are coming into the various communities with the new housing and apartment
Yep.
Okay. And how does that work, and what do you all do in that way?
So our multifamily production program
Yes.
is the tax credit program, and you know, prior to 1986, Section 8 was the bigger funding of lower income housing, and the the government wanted to bring in public-private partnerships, so they said we should give a tax incentive for private investors, and that's when the tax credit came about. Each state is allocated an allocation of credits based on our population. We get in Pennsylvania about 30 million annually, which is a 10-year credit. So the gross amount of that is 300 million every year. And then we allocate that to developers to build apartment complexes all throughout Pennsylvania. And we rank them against each other so that we're doing, hopefully, the best projects in the areas that need it the most. Some of it's targeting folks at 30, 40, 50, 60% of median income, and some are combined market rate and mixed use, mixed income type projects. But that's the single largest source of capital that comes to do affordable housing. Since 1986, we've done about 135,000 units, rental units, all over Pennsylvania.
Nice, nice. Now, you hear these commercials about reverse mortgages.
Oh, yeah.
Tell me about that, because I'm like, that doesn't sound right.
And that's, it's a great product if it's used correctly. I actually had my a former grandmother-in-law into reverse mortgage, but, I knew the product, and I explained it to all the heirs that if we do this, she gets to fix up her home. She gets to stay in it. She wanted to live in her basement and do a back patio. And I said, and by the time she gets older, there won't be any money for the heirs. And they said, that's fine, as long as we don't have to spend the money to fix it up. If that's what Grandma wants, then that's what we'll do. It's a product that can work very well. My company was into that business, and we got criticized for competing unfairly with the private sector. So I said, okay, we'll pull out of the business. You guys can take it over. And then what happened, they started charging high fees. So it's based on being house rich and cash poor. So you have equity in your home, and you're tapping that equity, which doesn't trigger a repayment from the homeowner, and you can stay in there until you actually pass away with no payment. And then at the end, whatever that is due to that lender, they get that, and then the balance goes to the heirs. In many cases, it's a education of the heirs that if you do this, there may be no money left for you at the end. You're okay with that. That needs to be explained, and this is what you take out. So what we were focusing on is what is the appraisal coming in for this property. So then companies started lowballing the appraisal. A house might be worth $125,000. They said, well, we think it's 75. There's 50,000 left on the table right there. Then the fees started ramping up. So where it would have been maybe $3,000 to $4,000, it became $9,000, $10,000. So they were taking out fees for some of the elderly and charging them high fees, is what we thought. And that didn't allow them to tap the full equity potential. The problem we have occurring now in Pennsylvania and other parts of the country is that the elderly, because of the taxes, that's forcing them in foreclosure. I don't have a program to help them with that because it's not a medical issue, it's not unemployment, it's purely tax driven. In many parts of the state, elderly are being forced into foreclosure because they can't afford to pay their taxes. So some of them are using reverse mortgages to take money out and try to pay their taxes. Which is not a good use of that. That's not how you should use it.
How about that? That's fascinating. Also, there's a major issue in Philadelphia. I know it was Philly, but it may have been all over the country. They were taking people's property based on, I don't know, it wasn't just back tax, was it a criminal record or something weird that was happening in Philly recently? And folks were having, and it was illegal. So what they would do is they would do it, and then people would go down and say, oh, you can't do that. And if they fought long enough, they would get it back. But if they gave up, that was the point. But the police would come in, and let's say it could be a marijuana charge or any other thing, and they would seize their property. Were you aware of that at all?
I heard about it, and I think they're shutting that down.
I hope so.
Because that's not right. The biggest, and the back tax issue is big in Philly right now. I'm getting more calls on that right now. But I think I heard of that. We weren't called in on that one, but I think that that got shut down pretty quick because that totally is illegal.
Yeah, it
doesn't make any sense, no.
But the back taxes thing is huge
That's
too, though.
big.
And even here, I noticed, man, in the paper, you know, come on, they once a year they have that 3 or 4 pages of people that have back taxes, which, you know, is wow. So how can people avoid that? Because taxes do go up, you know, and they're high and all that. But
you know, and it comes back to budgeting.
The budgeting.
You know what I mean? It really does. And, you know, the number one problem we see is people procrastinate.
Okay.
You know, I'm not going to deal with that, you know.
Yeah.
I know I got 1 year, I got 2 years before anything will happen. And then by the time I reach 2 or 3 years, you know, you got a big amount out there that you got to start to deal with. And
well, how is it though, Brother Brown, not to cut you off, where some people, when they pay their mortgage, they're paying that tax.
Yeah.
And then others don't have that. So
they're not some are required by the lender to escrow. But if you paid off your home, as most of the elderly has, there's no escrow.
Oh, that's right.
So, you know, budgeting for that comes back to like, don't forget, you still got to pay these taxes. You know, even though you don't have a mortgage, you still have a tax bill to pay. So that money gets lost in the shuffle and people start spending because they don't have no mortgage, but you still got taxes. And that's when we kind of bring them back through the budgeting process and say, you still have taxes, you still have insurance. And you should have insurance. There was a family that the house was worth easily $400,000 or $500,000. They were getting ready to sell it. They dropped their homeowner's insurance, and they had a fire. No coverage. No coverage. You know, why would you do that?
Yeah, why would they do that? That's
you know, you want to save what? I don't know, $1,000.
I know.
And look what you lost.
Look what you lost.
And the only value there is the land. And we don't do that.
And what happens to all these poor folks in Houston and all that didn't have the flood insurance?
Yeah.
And that money has come out of their pocket to try to restore?
Yeah, well, you know, FEMA will try to help some of them for their losses, basically. Yeah, even though they don't have flood insurance. So, you know, that's where the government's got to step in and say, okay, FEMA's got to make some of them at least partially whole or as much as they can, and that's where it's got to lie. Yeah, absolutely.
Yeah, my heart just goes out to those poor people.
Yeah, when I read that, I said, oh my goodness. And we advised, well, and I hear that all the time. It hadn't flooded here in 50 years. Well, you know, that doesn't mean for the cost of the insurance, and some people look at, you know, $500 a year, that's worth the peace of mind. There was one individual who they told him he didn't need it, but he saw the cost and he said, no, go ahead, I'll take it out. He was very happy. He said that $500 was the best $500 I ever spent to have a policy to cover flood insurance. But that's really what it comes
So,
down
you
to.
know, we're going to run out of time very quickly here, but there was a major issue here in Harrisburg out in one section where people lost their homes based on sinkholes. And all that kind of stuff. So those natural disasters can happen. And did they just lose their homes, or did they get paid a amount of money?
We were helping with that, as a matter of fact. And we had a mortgage down there, and we forgave our mortgage. So and quickly. It took longer than it should have for the city, and the city stepped up with some of the other municipalities to forgive the taxes. So we were trying to help, and we actually helped some of the homeowners reaching out to their lenders with Wells Fargo and City who wrote off their mortgages also. And when you got a sinkhole like that, and there's no sinkhole coverage in that, and again, that's what they said. Well, you got insurance, but that doesn't cover sinkholes. So we tried to help out there, and luckily that's been resolved with the Department of Community Economic Development and then FEMA also. So we have money to help them.
Well, we have absolutely run out of time. Brian Hudson, thank you so much for coming on. This was absolutely fascinating.
Thank you for having me. I know we can talk about this all day long.
This is good stuff. You have got to get down to the Pennsylvania Housing Finance Agency if you have any interest in knowing more about a house or an apartment. It's very, very critical. They're there and they will help you. Hey, thank you so much for watching Life Esteem. We're going to see you next time here on Life Esteem. Have a blessed day.